Hey, hello everyone. I hope you're doing great today. In today's video, we are going to be discussing advanced SMT. Okay, so before we begin the video, I just want you guys to know that whenever I am trading, I always keep my time on New York time. So if you're on TradingView, which is what we use for our analysis, you go here and you put your time on UTC-4, which is New York time. Sometimes it's going to be UTC-5. That is when I believe there is daylight savings or whatever. It doesn't matter. Always keep it on New York. Always select New York no matter what. Okay, so now that we have that out of the way, we have some very important information to discuss in today's video. Okay, so in today's video, right, we are discussing advanced SMT. Okay, so when we are talking about SMT, we are not just talking about any kind of random high or low where we see one high being taken and another asset that is correlated, we don't see that high being taken. We are looking at specific highs and specific lows, and we're expecting SMT there. Okay, so in saying this, right, let's begin the video. So SMT, when we look at SMT, we need to understand that this SMT is happening on a basis of time periods. What do I mean? When I say time periods, I'm simply saying that we can look at the market from a sessionally basis, from a daily basis, from a weekly basis, and we're going to stop there. We can't go higher than that, but for our day trading and scalping, we don't need to go any higher than what I just mentioned right now, right? So in saying that, okay, whenever I am looking at SMT, I am looking for the previous time basis. What does this mean? I'm on H4 right now, and whenever I am on the H4 time frame, I like to use the H4 time frame to look at the previous week's high and the previous week's low. Okay, so over here, this high that you see right there with SMT, right, this high, this is the highest high of the previous week when we were inside this trading week, right? So as you can see here, this is Monday. Let me take a line and put there for Monday. Let me put it when the market opens exactly so that you can see that on Sunday. Okay, so the market opens here on Sunday, right? So this is this week's trading. And let me put another line there so that you can see again. And this is where the trading for this week's ends, right? For this week ends. It ends right here. So this is a week in trading. So right at this time when we're trading during this week, right, as the market was moving during this week, from Monday to Friday, here was the previous week's high. Okay, so what you need to do is that you always need to look at what the previous week's high is. So you can take your line again and put it on Sunday again, and as you can see, we're inside this week over here, and this is the previous week. We want to look at the highest high and the lowest low inside the previous week, and we expect SMT there. Do you hear what I just said? Okay, we expect SMT there. So this SMT is SMT between the previous week's high. When you see this, you don't immediately go and sell, but now you are bearish. Can you see how this gives you bias, right? This is how you can get your bias and expect sells, but you're going to have some lower time frame confirmations. And if you have a weekly SMT, and when I say weekly SMT, I'm talking about the previous week's high or previous week's low. In this case, the previous week's high. Okay? We had a situation where during this week, we took out the last week's high right here, but in NASDAQ, we don't do that. Now, don't pay attention to Dow Jones, because Dow Jones is not in sync. Anytime you see that one of the assets is not in sync, don't pay attention to it, because it's going to give you false signals and you will incur losses. Okay? We can go into greater detail on something like this at another time, but we can pay attention to S&P 500 and NASDAQ because they're both moving together, right? So over here, for the S&P 500, we take out the previous week's high. We took it out here on Monday already, right? So if you saw that on Monday, you could sell. But know that Monday is not that high probability, because Monday, what usually happens is that lots of people on a Friday, let's say they had a losing week or whatever. Now, the weekend goes by and they get some kind of motivation. They're excited and now they're ready to attack the markets. What usually happens is that the banks know about this and they usually make Monday choppy and use that just to go against them. So Monday is not usually the best day. You should really try to look to trade from Tuesday, Wednesday, Thursday, and sometimes even Friday. But Monday is not that good. You can catch a scalp, but don't expect to catch this on Monday. Don't expect to catch this, because as you can see on Monday, we just traded up and we came back down and then we came back up again. So had you held this trade, you'd have been taken out on Tuesday. Okay? If you get taken out, there's no need to worry. If you see there is still SMT intact, you can keep your bias bearish. You don't change your mind and say, because I got taken out, now I am not bearish anymore. As long as you see the SMT is intact, you remain bearish. Does that make sense? Okay, so this is weekly SMT. Okay, if you don't get what I said, rewatch the video. This is very important information that you don't want to not understand. Okay, weekly SMT, and I use the 4-hour time frame whenever I'm looking at it, just because I feel that it's the best time frame to be able to see a week's trading price action.